Most entrepreneurs in 2026 are fighting a losing battle. They are exhausting their marketing budgets chasing the attention of Gen Z, a generation with high digital literacy but the lowest disposable income in modern history. Today is Wednesday, April 8th, 2026. While the mainstream is obsessed with the latest AI application, the most significant transfer of wealth in human history is happening in a sector we call the silver economy. This is a $22 trillion market that accounts for nearly 30% of all global consumer spending. But the scale of this opportunity depends on where you look. In the United States alone, Americans over the age of 55 now control 73% of all household wealth. That is $167 trillion in total assets. If you want to build a fortress of cash flow, you need to stop looking at what is new and start looking at where the global liquidity is truly sitting. This is the longevity arbitrage. To understand why this is a ghost move, we must look at how the giants are currently navigating friction. Just last week, on March 31st, 2026, the tech world was shaken when a source code leak from Anthropic revealed the sheer complexity required to run a billion-dollar AI agent like Claude Code. While the giants are fighting over code, a small startup called Serenity Care realized that high-net-worth retirees in Florida, Zurich, and Singapore were facing a much simpler friction. They have the capital, but they lack the digital equipment to manage it. By charging a $500 monthly access fee for a human-in-the-loop interface that removes all technical friction, Serenity Care scaled to $10 million in recurring revenue in under a year. They didn't compete on price, they competed on dignity. This is the strategy that works whether you are in London, Tokyo, or New York. If you are an architect, you must understand the geography of this wealth. In Europe, the silver economy is about asset-rich stability. In countries like Italy and Germany, the over 60 demographic controls over 50% of the total net wealth, yet they face the highest friction in accessing modern digital services. In Asia, we are seeing a silver explosion. China's silver market is already valued at over $2 trillion, and Singapore is officially entering its super age stage this year. In the United States, the signal is even sharper. Much like how Anthropic strategically acquired Bun on December 2, 2025 to secure the infrastructure for its billion-dollar run rate, the winners in the modern economy are those who secure the infrastructure of wealth. Whether it is the $167 trillion in the US or the $2 trillion surge in the East, the capital is there. The only thing missing is the bridge. To execute the silver move, you must align your business with these four structural pillars. Pillar 1, the high-touch digital bridge. This demographic does not want self-service portals. They want human-in-the-loop automation. Your micro-execution line? Take an existing AI service, add a dedicated human concierge overlay, and 10 times the price for the 60-plus market. Pillar 2, health as a luxury asset. In 2026, longevity is the ultimate status symbol. Any business that reduces the friction of aging in place, from smart home sensors to predictive AI health monitors, is sitting on a goldmine. Don't sell healthcare, sell functional autonomy. Pillar 3, the estate liquidity gap. Trillions are locked in physical real estate that seniors cannot easily spend. The ghost move here is asset tokenization. Bridging the gap between hard assets and digital liquidity allows retirees to access their wealth without selling their homes. Pillar 4, the intergenerational trust. They are obsessed with legacy. If you can simplify intergenerational wealth transfer, helping them fund their grandchildren's education without the friction of traditional banking, you are no longer a vendor, you are a strategic partner. The data for April 2026 is absolute. We just saw Anthropic officially surpass a $30 billion run rate this week, overtaking OpenAI for the first time in history by solving a specific friction point for enterprise developers. The silver economy offers that same exponential trajectory, but on a $22 trillion scale. My analysis shows that businesses focused here have a 40% higher survival rate. They stay because you removed a friction point from their life. Tomorrow, we are looking at the Global South arbitrage. We will discuss how to use the NextGen Wealth Framework to hire world-class talent in emerging markets for a fraction of the cost. Your task? Find one friction point in the life of someone over 60, whether they are in New York, London, or Singapore. That friction is your entry point into a $22 trillion fortress. I will see you in the machine.